Yes, welcome to our class today. We are moving to question 5 of financial accounting CPA for the series done in April 2025. So question 5, the first part reads, describe how inventories are valued as provided by the International Accounting Standards, IAS 2. Now, according to the valuation of inventories as per the IAS 2, the International Accounting Standards states that inventories provides guidance on the accounting treatment and the valuation of inventories. The key aspects in inventories valuation under the ISA are: first is what we call cost of inventories, cost of inventories. In that aspect of cost of inventories, it clearly states that inventories should be measured at the lower of cost and the net realizable value. Remember that inventories should be measured at the lower of cost and net realizable value. I'll showcase on how that is done. The cost of inventories includes all costs of purchase, conversion, and other incurred in bringing the inventories to their present location and condition. So the cost of purchase include the purchase price, import duties, transport, handling, and other costs directly attributed to the acquisition of the inventories. And the cost of conversion includes costs directly related to production process, such as direct labor, manufacturing, overheads, and all those. Then the second part in IS2 is the cost formulas. IS2 allows for the use of different cost formulas to determine the cost of inventories. The most common method includes the FIFO, which is always famously known as first in, first out. This method assumes that the oldest inventory items are sold first, and the cost of inventory is based on the cost of the earliest purchases. We have the weighted average cost. This method calculates the average cost of all inventories items available for sale during the period and applies this average cost to the inventory sold and the one that are remaining. And specific identification, this method is used for items that are not interchangeable and allows for the tracking of the actual cost of specific items. So that is how you describe how inventories are valued according to the International Accounting Standards 2, which gives that clarification there. Now we move to the second question. The second question reads, Minerva Limited is a manufacturer of office furniture. The following trial balance was extracted from the books of the company as at that 1st December 2024. We have the retained profit as at 1st January 2024 to be 1,699,000. We have the direct wages 20,056,000. Accounts receivables 20 million. Accounts payables 18,149,840. Bank 1.5 million. Purchase of raw materials 20,744,000. So we have the net sales, which were at 103,401,640. Building, the net book value was 6,800,000. Motor vehicle, the net book value was 4.8 million. Office equipment, the net book value was 3,420,000. Plant and machinery, the net book value was 20,220,000. There was an allowance for credit loss which was at 40,000. Director salaries 2,006,120. Then inventory as at 1st January 2024. Raw materials was 2.8 million, work in progress 5,040,000, finished goods was 10 million. Selling and distribution cost 11,202,440. Rent and rates 3.6, 3,609,360. Office salaries 6,640,520. Insurance was at 804,640. Other indirect factory cost, we had 1,602,520. Electricity and water 3,041,640. General administrative expenses 2,803,240. Reference expenses 400,000. Ordinary share capital was ordinary share capital was at 16 million, and 10% preference shares at 8 million. So the trial balance was balancing at 147,290,480. There are additional information. The additional information clearly states that inventory as at that 1st December 2024 were valued as follows. Raw materials 9.4 million, work in progress 3,145,000. And number 2, we are being told the company transfers output at a warehouse at a cost plus markup of 25%. During the year ended that 1st December 2024, the company produced 2,500 shares. At the end of the year, 2,300 shares produced during the year were sold. All opening inventories were sold during the year. Additional information number 3, the allowance for credit loss was increased by 15,000. And then additional information number 4, the company charges depreciation on all its fixed assets on reducing balance basis at the rates assets shown below. The assets were the building, plant and machinery, office equipment, and all that. The rate is as given as follows. Then the appointment is either administration or factory. Addition number 5. As at that 1st December 2024, there was an outstanding insurance premium of 250,000 and prepaid rent amounting to 275,000. Rents and rates, insurance and electricity and water are to be apportioned in the ratio of 4:5 to the factory and 1/5 to administration. The directors have proposed the following payment of final preference dividends and payment of ordinary dividends at 10%. Corporate tax at the year ended 31st December 2024 amounted to 12,500,000. Required a manufacturing account for the year ended that 1st December 2024. Now, the reason why we prepare a manufacturing account is for the purpose of trying to get the production cost. Our intention here is to ensure that we are calculating and we are getting the production cost. So first we need to add all the direct raw materials, direct labor, and direct expenses. And when you talk about all the direct raw materials, direct labor, direct expenses, these all are directly related to production, because our interest here is to find the production cost. Then of course after that we shall add the factory overheads or maybe other overheads for us to determine the prime cost before we get the production cost. So let's start preparing the manufacturing account for the year ended that 1st December 2024. So you have the data, you can say like I don't know why my pen is not writing. So we'll prepare the manufacturing account for the year ended that 1st December 2024. Now, in preparation of the manufacturing account, we are basically going, we said that it's for the purpose of trying to find the production cost. So we will start by looking at the cost of raw materials. Cost of raw materials. Now, if we check, we have been given in the cost of raw materials, we are going to start with the opening inventory or opening stock, and we will, according to the trial balance, we have been given inventory as at 1st January 2024. The opening stock for raw materials is 2,800,000. So here we will have the opening stock. We are going to have it at 2,800,000. Then we are going to add purchases. So we'll go back to our earlier information. We have been told the purchases for raw materials is 20,744,000. So we are going to have that as a figure there, 20,744,000. So once you add the opening stock plus the purchases, you're going to get what you call cost of raw materials available. Cost of raw materials available. So that is going to be if you calculate that, you're going to get 23,544,000 That is the cost of raw materials that will be available. Then you less closing stock. Then we less closing stock. Now, closing stock, we go back to our information. In additional information number 1, we have been told that the inventories as at 31st December 2024 were as valued. So the closing stock for raw materials is 9,400,000. So we are going to take the 9,400,000. 9,400,000. That is what we are going to less as a closing stock. So if you do that, we will get 14,144,000. So 14,144,000, this is the cost of raw materials, or cost of materials used. This will be cost of materials used, which will be 14,144,000. So now, after getting the cost of materials used, we add a direct labor. We add direct labor. So direct labor, we were told somewhere there we were been given direct wages, which is the same as direct labor. Direct wages was 20,056. So we add a direct labor, which is 20,056,000. So if you add that, you will get 34,200,000. 34,200,000. Definitely this is what is going to be the prime cost. We are going to refer that as our prime cost, which will be 34,200,000. Now, after adding the direct, both the direct manufacturing, the direct raw materials, and direct labor, now we go to the factory overheads. Now we will write here factory overheads. In the addition of factory overheads, we will start with the, let me start with the depreciation. In the depreciation, I will start with the plant and machinery. In the depreciation, we have been told in the additional information, the company charges depreciation for all its fixed assets on reducing balance basis at the rate of assets shown below. So plant and machinery, we have been told, why are we studying with the plant and machinery? Because I jumped building because the building has been allotted to administration. So because we are talking about the production cost, plant and machinery is the one that has been allotted to the factory, 15%. So plant and machinery, we have been given here the plant and machinery to be 20,220,000. So we'll get 15% of that. That will be 15 over 100 times 20 220,000. That will get 3 million, 33,000 on plant and machinery. Then our next asset to depreciate is on motor vehicle. Motor vehicle, we have been told that motor vehicle is depreciating at 20%, but we have been told that 60% is allotted to factory and 40% on administration. So we are going to get motor vehicle 20% of the total cost, but we'll do the 60% of that. So we will have motor vehicle. So motor vehicle will be 20 over 100 times the cost of motor vehicle is the net value is 4,800,000. So we are going to get 4,800,000 times 60 over 100. I'm doing that because we have been told that 60% is the what has been allotted to the factory for that. So if we do that, we will get the cost will be 576. The depreciation cost will be 576,000 on that. Now then, I think in terms of factory, those are the two assets that are depreciating. In the similar information we've been told here, in additional information number 6, rent and rates, insurance, and electricity and water are to be apportioned in the ratio of 4:5 to the factory. And then there's a place we have been told here, addition number 5, that as at that 1st December 2024, there was an outstanding insurance premium of 250 and prepaid rent amount of 275. So we shall talk about rent and rates. So we have been told they're representing at 4.5 times. We will check on rent and rates is 3,609,360, but we are being told there's a prepaid rent amounting to 275. So what we are going to do, we will take that figure. Let me write it somewhere. We'll take that figure of rent and rates, that is 3,609,360, into brackets 3,609,360 minus 250,000. Yeah, I think to 50,000, as you have agreed, is the amount that we are being told. 275, sorry, and 250 was the for insurance. Prepaid amount for rent is 275, so minus 275. Minus 2. This 2 is not coming properly. So minus 275,000. So if we do 3609 360 minus 275,000, that will be 3 times 4 divided by 5. We are going to get the figure to be 2,667,488. Then now next, we have been told about insurance. So next we shall talk about insurance. So also insurance, we have been told here that here we have been told there was an outstanding insurance premium of 250. So and here we have been told rent and rate insurance and electricity to factory were portion 4/5. So that is, we are going to take 250 and we will add the insurance amount, which is given here, 804,640. So we will do 4/5 times the figure in the insurance is 804,640 plus 250,000 on that. So if we calculate that, we are going to get 843 712. And then of course we'll talk about electricity and water. Also in electricity and water we have 4/5, and for the electricity and water, I think there's no adjustable information that is affecting it. So electricity and water will take 3,041,640. So we'll times 3,041,640. So if you do that, you will get 2,433,312. Then of course these are information where we have been told other indirect factory cost. We have been given the other indirect factory cost to be 1,602,520. So other indirect factory cost, we have been told to be 1,602,520. So if you add all these costs, if you add all the factory overheads, you will get all the costs will come to 11,156,032. So if you had now 34,200, that is the prime cost, plus the other factory overheads, that is that 4,200,000 plus 11,156,032, you're going to get 45,356 and 32. 45,356 and 32. Now, this is what we call production cost. This is what we refer to as production cost. So, after getting the production cost, we will add opening work in progress. We are going to add opening working in progress. So we'll go back to our information. We have inventory as 1st January 2024. Work in progress is 5,040,000. So we will add our opening work in progress to be 5,040,000. If you add that and then we less, just let me put them together. Closing work in progress, closing work in progress. So we less that. If you do that, closing work in progress, from additional information, we have been told that inventory as at that 1st December were valued as work in progress is 3,145. So 3,145,000. So we less that closing work in progress. So we say 3,145. We less that. Okay, let's see what we get. So the heading that you get 47,251,032. Now this is cost of goods manufactured. This is cost of goods. Cost of goods manufactured will be 47,000 at present. So we are going to get the factory profit, but we shall calculate that, don't mind. Then we are going to get transfer value of goods manufactured. Transfer value of goods manufactured. Now basically, transfer value of goods manufactured is always given in the additional information. It can either be in a markup or it can be in a profit margin. Now in this perspective, in our additional information, number 2, we have been told that the company transfers output to the warehouse at a cost plus markup of 25% during the year ended that 1st December 2024. The company produced 2,500 shares And at the end of the year, 2,300 shares produced during the year were sold. All opening inventories were sold during the year. So we have been given the cost plus markup of 25%. So for us to get our goods transfer value of goods manufactured, we can take that is 100% plus 25 markup, that will be 125%. So if we take 125% of this figure here of the cost of goods, that is 47,251,032, you will get times 47,251,032, you're going to get 59,063,790. That is the transfer value for the markup. So 59,063,790. So if you get that figure, you minus you minus the cost of goods manufactured, 47,251,032, you're going to get your factory profit to be 11,812,758. You will get your factory profit to be that. So basically, this is what we call the manufacturing account. This is how we prepare the manufacturing account step by step. So at least that is our calculation. I had done it earlier, and there's a proper presentation of that. So as I have said, you start with the cost of raw materials. You look at the opening stock and the opening stock of raw materials, not the opening stock of work in progress and all that. The open stock of raw materials, which is 2,800,000. You add purchases, we are given that. You will be able to get the cost of raw materials available. Then you less the closing stock of the raw materials. You will get the cost of materials used, which was 14 million. So you add direct labor, you are going to get the prime cost. So you add the factory overheads. So we have first depreciation of the plant and machinery, the cost of depreciation for the motor vehicle, and the motor vehicle for the purpose of factory, we were told it's 60%. That is why we are using 60% of that. We'll get that depreciation. Rent and rates, we are given the ratio of 4 to 5. So we had the rent and rates minus the prepaid ones for us to get that cost. Then insurance, there was arrears, the insurance cost, and we have been told that the arrears, because in our additional information up here we are being told that insurance, the outstanding insurance premium was 250,000. So that is an outstanding insurance premiums. So we add to that. That is why we are adding to that for us, because it's an outstanding. It's supposed to be paid. Electricity and water, we are getting, there's no another information that is affecting. We do it, and we'll talk about other indirect factory cost. On that, you get the total factory overheads. So if you add it to that, you will get the production cost, and then you add the opening work in progress, you less the closing work in progress, you will get the cost of goods manufactured. And so you calculate the transfer value of the manufactured goods, you are able to get your factory profit in that manner. So that is how you get to prepare that. The number 2, now we are being told to prepare from the question, we are being told to prepare a statement of profit and loss for the year ended 31st December into that. So, before I come to the final work, which I've already done, but I will want to show how that has been worked on. Let me create space for that. So we have number 2, your statement of profit or loss account. Now we will start with the sales. So we go up. We shall be going up and down. We check on the sales. We have been given our net sales to be 103,401,640. So we have been told to prepare the statement of profit and loss account. The question states as at for the year ended 31st December period. So you can add that down there when you are preparing for the year ended 31st December 2024. So we have our sales. So if you look at the data that we have, I've said sales. We have 103,401,640. So I will use that information. So sales, we have 103,401,640, and then we will now less cost of goods sold. In cost of goods, we'll start with the opening stock. Now on the opening stock, we'll check on the opening stock for the finished goods. First inventory, 1st January 2024, the finished goods was at 10,000. So the opening stock or the finished goods will be 10,000. So here we are going to use 10 million, sorry, not 10,000. Let's put it that, yeah. 10 million. Then we shall add purchase, transfer the figure that we got there, transfer value, the transfer value, the figure that we had here, the transfer value of goods manufactured. So the transfer value of goods manufactured, that is 59 million, sorry, 63,000 and 790. So that is the transfer of goods manufacturing. Then we shall get the closing stock. Sorry, we less the closing stock. It's good to be clear on that. Less closing stock. So we less the closing stock. How do we get the closing stock? How do we get the closing stock? Remember, we have been told that from that additional information, we have been told that as at that 1st December, there was an outstanding, not that. In the additional information number 2, the company transfer output to the warehouse at a cost plus markup of 25%. During the year ended that 1st December, the company produced 2,500 shares, and at the end of the year, 2,300 shares produced during the year was sold. All opening in inventory was sold during the year. So we are being told that the shares that were produced were 2,500. So what we are going to do, we are going to take this figure, which we have got here as the cost of goods manufactured. So that will be 47,251,032. We divide them by 2,500. So if we are going to do that, if we are going to do that, let me see what we are going to get. 47,251,032 divided by 2,500, you will get 18,941. This is the cost per share. This is the cost per share. That is the cost per share. So we are being told that out of 2,500 minus 2,300 was sold. So the balance is 200. So let's take the balance 200. We times 18,900.41. So we take 200 times 18,900.41. We are going to get 3,780 and 082. 3,780 082. So this is the figure we are going to have as our closing stock. So we less 3,780 082. So if we do that, we add 10,000 plus 59, we get 69,003. 69,003. You minus 3,000 and all that, you are going to get 65,000,000. Okay, let me just get that. Minus 3,780,082. You'll get 65,283,708. So we put that into brackets. I think I just rounded off this when I was calculating that. When I got this, I just rounded off on that. So if we minus that, you're going to get 103,401,640 minus 65,283,708. You will get 38,117,932 on that. That is our gross profit. So that is our gross profit. We can add other income. We can add other income. Let me just write it correctly. Now, other income, we have factory profit. Factory profit, we got it up here. That is 11,812. So we have 11. Eight 12 758. If you add that, you will get 49,930,690 as your total income. So we less expenses. So the expenses that are here, let's start with the depreciation. Let's start with depreciation. The first depreciation that we will have from the information that we are going to be given is now for administration is building. So we are going to take to what is the building cost, because we have been told that the depreciation for the building is 2.5%. So if you look at the building is 6,800,000, so we'll get 2.5% of that. So we are going to do here building, that will be 2.5 over 100 times 6,800,000. So you will get that to be 2.5 divided by 100 times 6,800. We are going to get that at 170,000. Then our next depreciation event from the additional information will be the one that I've got now in the administration, will be office equipment, which is 10%, and the motor vehicle, the 40% of the goes to administration of motor vehicle. So motor vehicle had both factory and administration. So we'll check on the office equipment. So on the office equipment, we have 3,420,000, but so that will be 10% of that. So the next we have office equipment, so that will be 10 over 100 times 3,420,000. we will get 342,000 in terms of administration. Then we will have we have said we will use motor vehicle. Motor vehicle, we have been given 20% times the cost of motor vehicle was what was that cost? Let me go back. I'm just looking at the data that I have from the question here. The cost on motor vehicle is 4,800, but that is 40% of that. So we are going to take 4,800,000 that is 4,800,000 times 40/100. If we do that, we are going to get 384,000. Of course, and then now we'll come to, from the additional information we have been given, we have been told that rent, rates, insurance, and electricity and water to be apportioned in the ratio 4:5 to the factory and 1/5 to administration. So we'll use 1/5 of the rents for administration. So here we are going to look at rent and rates. That would be 1/5 of rent and rates. But remember, in the rent and rents, there's an adjustment from the additional information. We are being told rent and rents. I wish I had this paper physically. There's no need for me to could have gone up and down. I'm just using the paper as a soft copy. The rent and rents, here we are being told 3,609,360. So let me just have that down. 3,609,360. But we need to, from the additional information, we are being told that additional information number 5, that at 31st December 2024, there was an outstanding insurance premium of 250 and prepaid rent amount of 275. So prepaid rent amount of 275. So we will have to reduce that minus 275. So if we reduce that amount, we will get our amount to be 334,360. So divided by 5 of that, we will get 606,872. Then we will come to insurance. Also, the portion is 1/5 times. Also in insurance, if we calculate so that we'll be able to get what figure are we going to use there, we have been told that the insurance is 804. So let me have that 804 640. So we are going to add, because the additional information here we are being told is that there was an outstanding insurance premium of 250. So that is an expense. So that we add it to 250. So we get 1,054,000. So that is the figure we are going to use that at that point. 1,054,640. So times 1 divided by 5, you are going to get 210,928. And then we have electricity and water, same as 1/5 times. I think in electricity and water we have no adjustments, so we'll go with the figure that we have. That will be 3,041,640. So the portion that has been given there is 1/5. So we have 3,041,640. So times 1/5, we are going to get 608,328. Right, so those are part of the calculations that we have. So we add other now expenses that are given there. We have other expenses that are given there. If we go back to the information, let me just read all the expenses at once, because those are the ones that, so that I don't have to be coming back. So the other expenses we are going to have will be director salaries that are given at that amount, 2,006,120. We will have office salaries at 6,640,520. We are going to have general administrative expenses at 2,803,240. What else? Okay, let me check. We have selling and distribution. Yeah, we have selling and distribution cost at 2,440, and of course, so we have the directors' salaries, general expenses, office salaries, and all that. I think those are all the expenses that we are going to have at that point. So here, just because I've highlighted all of them, I will mention them. We have the directors' salaries, we have general administrative expenses, then we have office salaries, and then we have selling and distribution cost. So you will get that director's expenses, we have 2,006,000 then 120. In terms of general administrative expenses, we have 2,803,240. We have been given there. Office salaries, we have 6,640,520, and then selling and distribution, we have 11,002,440. And then of course we have increase in allowance. We have increase in allowance, it's an expense. We have been told from the additional information there that that is from additional information number 3. The allowance for credit loss was increased by 15,000. So that becomes another expense at that point. So we have 15,000. So if you add all these expenses, all of them, they're going to come to 24. I'm just writing this because I've already added them. 24,849, 448. You can confirm if you add all the expenses from depreciation, all you come to all those, you will get 24,849, 448. So you less the total expenses from the total income. If you less that, you're going to get 25,081,242. 25,081,242. This will be what we call net income. So from the net income, we less corporate tax. And we have been told from the information here, let me go to the question. From the question, we have been told that corporate tax for the year ended, from additional information number 8, corporate tax for the year ended amount to 12,500,000. So we less 12,500,000 from our net income. So we less 12,500,000. If you do that, okay. Also, something else, we also less preferred dividends, because we were said that we were told that 10% preferred dividends were paid. So preferred dividends and ordinary shareholders so the preferred dividends, we were told, were done at 10%, and we are being told from the question payment of final preferred dividends and payment of ordinary dividends at 10%. So from the question above here, we are being told 10% of the preferred dividend shares were given. So we are going to take the ordinary share capital that was at 16 million, and then 10% of the 8 million on the preferred dividends. So that we are going to less that from there. So we'll have the preferred dividends 10% times 8 million which will be that will be 800,000. Then of course dividend shareholders was 16 million. Is it 16 million or 1 million still? Okay, yeah, this adjustment, kindly take note. We are being told, of course, we have from the question, we have ordinary share capital at 16 million, then 10% preferred dividends was paid. So we are being told here from the additional information that the director proposed the following: payment of the final preferred dividends, that is what we have calculated, 10% of that 8 million, and payment of ordinary dividends at 10%. So the ordinary dividends also are going to be paid at 10%. So the 10% that was being paid for ordinary dividends, so 10% of 16 million is also going to be 1.6. Yeah, that is okay. So in total, we are going to get the dividend paid to be 2,400,000. So that is how we are going to get that. So we are also going to less that. So if you less the dividends plus the corporate tax from the net income, you're likely to get you're going to get what we call, if you less that, you're going to get 10. You can confirm 181 242. This is going to be referred as retained profit for the year. This is going to be the retained profit for the year. And then we will add retained profit. Remember, when we started from the trial balance, the topmost information there is the first information there is the retained profit. Retained profit as at 1st January 2024, 1,699,000. So we add that. So we add that 1,699,000. We will get 11,880,242. That is what we call retained profit carried forward. So that is our statement of profit and loss account. So that is how we calculate that. I think I've done it officially here. You can be able to see. We start with the sales. We come to the we less our cost of goods sold. We to get that cost of sales. To get the cost of sales, we'll start by opening stock of the finished goods, which is 10 million. We will add transfer value for goods manufactured. We already calculated that when we were doing the manufacturing account. And then we can be able to less the closing stock. I told you how we got the closing stock. Then you minus that from the sales, the cost of sales, you will get the gross profit. Then you add other income, which is the factory profit. On that, you will be able to get, in fact, we can, if we have that, this, put it here, we can be able to get the total income. So then you less the expenses. Of course, on this part, I've started with an increase in allowance. Then we come to depreciation, the building, on office equipment, on motor vehicle, and motor vehicle 40% was the one that was allocated to administration. Rent and rates, of course, you use that, and you less the the one that had already been prepaid. Insurance, you add the insurance plus the outstanding balance, the premiums that haven't been paid. Electricity and water, we have been told the proportion all this for administration is 1/5. You get that. You add the director salaries, general administration expenses, office salaries, selling and distribution cost. All those expenses come to 24,849,000. Then of course you less from the total income, you are able to get the net income. You less the corporate tax and the preferred dividends, also plus the ordinary share capital, which has been given also at 10%. You will get that total to be 2,400,000. So if you less that, you will get the retained profit for the year, which is 10,181,242. Then you add the retained profit, which we have been given from the trial balance. Of course, you get the retained profit carried forward. So if you do that, you can still use the same that information, and you can prepare the statement of financial position. We have not been asked that, but I have prepared it here. it's good that you can also, for the purpose of ensuring that the information is correct, or you might be asked in the next question to prepare a statement of financial position. You will do that. Ensure that you use the current, you calculate the accumulated depreciation, all of it. Then you get the net book value. Then you come to the total non-current assets. All of them, look at them. You will get that, and you will find that our financial statement of our financial position is balancing that 68 total assets at 68,780,082, and the total capital and liability at 68,780,082. So I have left this for your own practice for the purpose of confirmation. Thank you.
So if you like this video, you can always enroll with us. You'll be able to access more of these revision sessions, and also you'll be able to find well done lectures or pre-recorded videos for all the KASNEB courses as well as CHRP. And in case of anything, you can always reach us out. We have our contact details on the screen. Feel free to call, feel free to WhatsApp anytime. So thank you, and let's meet in our next session.